Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me is Snehi Shah. And this is a show where we take you through all the stocks that are buzzing away in trade and on the back of news flow or on the back of technicals. But first up, let's take a look at where markets are at. A good recovery coming in, Snehi, from the day's lowest point. In fact, we have managed to scale back those 24,378 levels. In fact, we are inching towards the 24,400 levels now. But clearly, Nifty Bank is an outperformer today as far as compared to the benchmark indices. That has given better gains. In fact, it's trading with gains of 1.7% right now.
Absolutely. Like you mentioned, a good uptick, recovery in fact being seen on the Nifty. It's recovered by roughly 200 points from the day's low, and also 1% higher. Like you mentioned, Nifty Bank is also doing pretty well. In fact, it's the entire financial space that's doing well, because PSU banks, private banks, as well as Nifty Financials, all of these three indices are doing pretty well for themselves. SBI Life, HDFC Life, BEL are your big winners today. Maruti Suzuki, Tata Motors, Hero Motor, Dr. Reddy's, Bajaj Auto. The auto pack is amongst the big losers today. But very quickly, sectorally, PSU banks, financial services, Nifty Bank and realty, however, has managed to slip into the green this time. You had the financials in the green since morning. However, Nifty Auto, Pharma, Metal, IT, FMCG, all of these continue to remain top losers today, Ankita.
All right, moving on then, let's get our technical analyst and also our researcher on board. We have Chandan Taparia, who's a derivatives and technical analyst from Motilal Oswal, and we have Ria from our research team joining us now. Hi, good afternoon to both of you, and wish you both a very happy Dhanteras. Let's get started with all the stocks that are in focus today. First up is Bharti Airtel, that is in focus today. If you look at the numbers, largely inline set of numbers coming in on a sequential basis. If you see, the revenue is up 8% to 41,473 crore rupees. The EBITDA is also up 11% at 21,846 crores, and the margins have also expanded to 52.7% versus 51.2%. The net profit, however, has declined 14%, coming in at 3,593 crores versus 4,160 crore rupees. Also, if you look at some of the factors, their exceptional loss of 854 crores is primarily owing to the Africa forex adjustment led the net profit that led to net profit lower. The consolidated numbers are largely in line with the Indian mobile business leading the growth. Now, the Indian mobile business has benefited owing to tariff hikes, and the customer base declines is owing to the churn seen post the tariff hike. Also, home broadband segment performance was in line with street expectation. That is aided on the back of strong subscriber growth. But for now, if you look at Bharti Airtel, it is reeling under a bit of a selling pressure coming in, trading with cuts of 1.5%.
Okay, well, so that's the take coming in on Bharti Airtel. Largely inline set of numbers coming in, but stock slightly under pressure. If you take a look at Aegis Logistics, that's the next stock we wish to highlight. Aegis Vopak Terminals Limited has announced that its board of directors have approved its proposal to raise 4,000 crore rupees through an initial public offering with an IPO and 800 crores through the private placement route. The Aegis Logistics subsidiary IPO will comprise a fresh issue of equity shares with a face value of 10 rupees each. This is what the company's exchange filing stated as well. The company added that the IPO is subject to regulatory approvals as well as market conditions. So this IPO has got the street rather excited. The subsidiary's IPO, which is Aegis Vopak Terminals, and that IPO has got the street excited. The stock is also up more than 3.5% as we speak.
All right, coming to you then, Chandan. Dixon Tech is the name that you picked out for us. This one has given some solid returns of 76% in the last 6 months. Last 8 months also is seen an uptick of 8%. Tell us, is there more upside left? How does one play this counter? Because Dixon Tech has run up quite a bit.
Good afternoon. Thanks for having me. Happy Dhanteras to you, entire team, and all the viewers. So, market is all set to see the higher swing amid the festive vibes, and I believe that the positivity will now commence to start the next leg of rally in the market. So, talking about Dixon, one of the strongest name in the market, rated by more than 127% in this year. It witnessed some volatile swing on Friday, as corrected from 15,900 to 13,000 marks. But what a comeback in last 2 days. And this strongest counter is all set to again head towards the lifetime high territory. So with support of 14,400, we are expecting Dixon to head towards 15,900 to 16,500 marks.
Okay, so those are the levels that Chandan is spotting for Dixon Tech. Ria, you've picked out a high flyer in today's trade, and that is Federal Bank. Now, numbers, candidate, and also lots of brokerage notes coming in. Tell us what is cheering the street so much when it comes to this stock.
Yes, so Federal Bank is up more than 8% today on the back of a very strong set of earnings in this quarter. Now, the net profit has grown about 11% over the previous year. Even the advances and deposit growth remained quite strong at 19.4% and 15.6% on a year-on-year basis. The net interest margin came in at around 3.12% versus 3.16%, which was slightly impacted by around 7 basis points due to interest charges under the other income category. Now, the asset quality also remained quite stable. The credit cost came in at 0.3% versus 0.2% on a sequential basis. If you look at the slippages and the NPAs as well, those have improved marginally on a sequential basis. Now, going forward, the management expects the credit costs to remain in line, and the ROA has actually stood at 1.28% and 13.65%. Going forward, the ROA might see a 1 to 2 basis point improvement, and the ROE for the full year is expected to be around 13.5%. Now, we also have two brokerages which have quite positive views on Federal Bank. Nuvama has maintained a buy with a target price of rupees 235, and IIFL Securities has also upgraded the stock to an add rating versus the earlier reduced rating with a target price of 180 versus the earlier target price of 170. All right, that's Federal Bank. But moving on to another banking name, Chandan, ICICI Bank is what you have picked out for us. Now, this stock is trading at its hovering around its 52-week high. Is there more upside, or should one hold the stock? Should one start booking the profits? Tell us, how does one play this counter?
I believe ICICI Bank is going to be very strong here, and this is going to be one of the strongest name to hit the new lifetime high after the recent corrective move. In the recent scenario, the Nifty has corrected by around 2,000 points, and Bank Nifty also fell in line with the same. But the recovery in the ICICI Bank is the reason that why Bank Nifty started to outperform the Nifty from last couple of days. So as of now, looking at the price structure, it has bottomed out at 1220 zone and now making higher tops, higher bottom from last 3-4 days. Lifetime high for the counter is at 1362. That is just 2% away from the current zone. So I believe it can head to 1362 and much higher beyond the same. So one can hold the long position with support of 1295, and ICICI Bank has all potential to rally towards 1362 to 1420 marks. And I believe if ICICI Bank moves like this, then Bank Nifty can see the outperformance, and Bank Nifty a hold above 51,750 can take it towards 52,500 to 53,000, and ICICI Bank can also see the rally of 4 to 5% from current zone.
Very strong outlook coming in for ICICI Bank. Single high flyer expected to carry the Bank Nifty on its shoulders, especially after the stellar Q2 numbers that the bank has reported. But on that note, we'll slip into a very short break on Market Fatafat. We'll keep it going with all the stocks just on the other side of the short break. See you, stay tuned.
Welcome back. You're tuned into Market Fatafat, where we are taking you through all the top buzzers in trade today. So let's resume then. JSW Infra is one of the names, one of the earnings candidates that has done pretty well for itself. In fact, it was trading with gains of 7% in the morning. Now it's inched up to 9.5%. What a rally coming in on JSW Infra. In fact, it has reported its highest ever quarterly profit in Q2, and that has been aided by the higher cargo volumes. The company has reported consolidated net profit of 37.2 crores in the second quarter ended September 30th, which is up 46% on a year-on-year basis. The company's handled 27.5 million metric tons of cargo, 16% higher over the last year, and also the higher cargo volumes were driven by higher capacity utilization at its coal terminals, and the company's earnings release leading to the higher third-party volumes growth of 48% on a year-on-year basis. Now, the company's revenue from operations also rose 18% to 1,000 crore rupees as compared to the 848 crore rupees on a year-on-year basis. Now, meanwhile, the total expenses fell nearly 6% to 634 crores, helping boost its margin to 55% from a 54% a year ago. So, on the back of good set of results, JSW Infra is buzzing away in trade.
The focus is on JSW Infra today, but let's also talk about another stock that's in focus, and that's Jio Financial. This stock is in focus because Jio Payment Solutions Limited, which is a wholly owned subsidiary of Jio Financial Services, informed the exchanges that it has received approval from the Reserve Bank of India to operate as an online payment aggregator, marking a significant step ahead in India's digital payment services. The certificate of authorization permits JPSL to manage digital transactions and expanding its financial services reach. Jio Financial aims to offer full-scale banking using Jio Payments Bank's platform for saving accounts. Now, Jio Financial Services has also introduced Smart Gold as a feature on the Jio Finance app. It allows customers to buy digital gold, and users can invest in gold starting from as low as just 10 rupees, providing an accessible entry point for many people. Smart Gold offers a completely digital process for purchasing gold with options to redeem investments for cash, gold, coins or jewelry, and customers can buy gold in flexible denominations either in rupees or in grams, and can order physical gold coin delivery for home delivery as well. So a couple of positive news flows coming in for Jio Financial, and on the back of that the stock is up 2.3%.
All right, coming to you, Chandan. Bajaj Finance is the name that you picked out for us. It has been consolidating for the last 1 month. In fact, correct me if I'm wrong, this one has actually, crossed below its 200 DMA. Is that a negative trend building up on the stock, or what are you seeing on the charts?
So Bajaj Finance already has seen a corrective move from 17,900 to 6,600 zone in last 4 weeks. But now it is getting some stability. It's below key moving averages, but now trying to struggle and surpass 50-day exponential moving average. So that may provide some trigger for buying side. If I look at the mechanical indicator, the stock is turning from its immediate oversold territory. So because of that, some short covering trigger may be there. So with all these price pattern, I believe some bounce could be seen in the counter. So with support of 6,800, we are expecting a bounce towards 7,450 to 7,500 zone in Bajaj Finance.
So that's the levels that Chandan's spotting of a Bajaj Finance. But Ria, you've picked out Skipper, and it's been a good set of numbers coming in from this company, but the stock is under pressure today. In fact, earlier in the day it was in the green. Tell us what's been happening with the numbers and why is the street reacting the way it is?
Skipper has reported a very good set of numbers. In fact, it's actually reported its best ever second quarter revenue, coming in at rupees 1,110 crores, up around 43.7% on a year-on-year basis. And this was largely driven by the strong execution in the engineering and infra business segments. Now, the net profit has seen a big jump of around 67% over the previous year. Even the EBITDA margins, if you look at those, that have come in at around 12.3% versus 9.5%. So up around 275 basis points on a year-on-year basis. If you look at the EBITDA as well, that is also up almost 85% over the previous year. They've also reported their highest ever closing order book, which now stands at rupees 6,590 crores. And the quarterly order inflow has also come in at rupees 1,660 crores for the engineering products and the EPC works. The company has also expanded its footprint in the North and South American regions, and the management has said that they see vast opportunities fueled by India's 500 gigawatt renewable energy integration plan. So good set of numbers coming in from Skipper, but the stock is reeling under some pressure, down around 2.5% right now.
All right, moving on then from Skipper to another earnings candidate that reported its numbers. That's Tata Technologies that is in focus today. In fact, it reported a 2% decline in its consolidated net profit for the quarter ended September 30th to 157 crore rupees. The same stood at 160 crore rupees in the last year quarter. Now, the revenue from operations, in the reporting quarter increased by 2% on a year-on-year basis to 1,296 crores as against 1,269 crores in the same quarter last year. Now, the company also reported an operating EBITDA of 235 crores, which is up 10% on a year-on-year basis. The EBITDA margins, meanwhile, improved to 18.2% in the second quarter. Now, the margin improvement during the quarter was supposedly by the increased offshoring, and additionally, the company's disciplined execution led to strong cash conversions in the first half of the year, with free cash flow to net income conversion exceeding 100%. On the back of that, Tata Tech is in focus today, trading absolutely flat with minor cuts of 0.2%.
On that note, let's just quickly mark the latest Nifty earnings that we've seen. The flash on the bottom of your screen, numbers from Cipla for the second quarter have started trickling in. Net revenue has come in at 7,051 crores compared to 678.2 crores. It's higher by 5.6%, so that number is looking good. EBITDA has also come in at 1,885.6 crores compared to 1,733.8 crores. A healthy uptick of 8.8%, so that's also largely looking good. Your EBITDA margin has gone up significantly. It's come in at 26.7 compared to 26% on a year-on-year basis, and net profit has also jumped 15.2% year-on-year, coming in at 1,302.5 crores compared to 1,131 crores this time last year. This is largely what the fine print is looking like as of now. Revenue is in line with what we were estimating here at ET Now. However, margins in PAT, which is the net profit, have beat our expectations. EBITDA is also largely in line with what we were expecting, but there's what the scorecard looks like, and that's the ET Now verdict. Revenue largely in line with what we were expecting. However, the margin and PAT are above what we were expecting, but nonetheless, the stock seems to be slightly under pressure. It's 1.5% lower as we speak.
All right, that is Cipla, nifty earnings candidate, and also, in fact, just after the results, a small uptick that you can see coming in on Cipla right now as we speak, right after its results. A largely in-line set of numbers, but a beat coming in on PAT. Now, let's continue. And let's go to Chandan. Chandan, you've picked out MGL for us. Tell us what you're seeing on the charts for this.
Yes, looking at MGL and other oil and gas company, profit booking is clearly visible. Most of these stocks are making lower top, lower bottom, and we are heading towards monthly expiry, and stock has built up a short position as in this series is down by more than 25%, trading below its all volume weighted averages. So because of that, weakness could continue. As of now, 1460 is immediate hurdle. Till it remains below 1460, MGL can further correct towards 1370 marks.
That's the level that Chandan is spotting for Mahanagar Gas. Slight correction expected on that front. But on that note, Riya, Chandan, thank you so much for joining us on the show. And once again, the best of festive greetings to you. But viewers, with that, it's a wrap on this edition of Market Fatafat. Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.